All right, so in this lesson, we're going to talk about currency pairs and quotes. Like I said before, Forex is just the buying and selling of currencies in pairs simultaneously. So a lot of people, they choose to go with the Euro USD pair because it is one of the most popular pairs and one of the most volatile pairs. So a lot of new traders, they tend to use that as their pair of choice. So Euro USD, like I said, is one of the most popular pairs. So when you are looking at a pair like this, the Euro is the base currency pair. The USD is the quote pair. So your price of what you're going to get when you look at a pair is going to be based on that second pair, which is the quote currency. So anytime you look at a currency pair, the first pair, in this case, it's the Euro, is going to always equal 1. So 1 euro is going to be equivalent to whatever that quote price is that you receive when you're looking at TradingView or when you are on MetaTrader 4. So that's very important for you to know that whatever that first pair is always going to be equivalent to 1. And so if you're looking at USD JPY, that would mean that $1 US is whatever that quote price is for the Japanese yen. So just to break that down a little further, when you're buying one currency, you are selling the other and vice versa. The base currency always equals 1. And so the bid price, you'll see when you pull up MetaTrader 4, you're going to see a bid and an ask price. Typically, the bid price is going to be in red. That price is based on what, if you were to sell, if you're a person that's saying, okay, the price is going down, I'm going to get in a sale, that bid price is the price that you're actually getting. Vice versa, if you are getting into a buy, the ask price is going to be the buy. So that base currency is going to be based on that. I'm sorry, that quote currency is going to be based on that buy price. So just to show you an example of that, I have a screenshot of what it looks like on MetaTrader 4. If you have not already downloaded the MetaTrader 4 on your app on your phone, you definitely want to do that because this is where you're going to be executing your trades. And so, say for instance, right here, you pulled up MetaTrader 4, you're ready to get in a trade. You're going to do a market execution, which means that whatever the current price is, that's the price that you're going with. So if you were to get in a sale, you would be getting the 1.0176 would be the price that you would be getting. So 1 euro would be sold for 1.0176. If you are buying, then 1 euro would be equivalent to 1.0177 in US dollar. So basically, if you were thinking about algebra, like when we were in school, you would say, okay, the base is equal to X. So the X is always changing. So when you look at a chart and those numbers are fluctuating, that is the quote price that's fluctuating. The base is always 1. So for example, again, if you were to take 1 euro, in this case, it would be 1.0177. And I know this foundational stuff can be a little boring, but it's very important that you understand this so that you're not gambling when you get into the market, that you really understand what this stuff means and you have a clear understanding of what you are actually doing when you're trading. So just always keep in mind, and you can make you some notes if you need to, or you can screenshot this. The bid is always the price to sell. The ask is always the price to buy. And the base currency is always equivalent to 1. So the bid and the ask price are both included in the quote. So it's going to be dependent upon what position you actually take, whether you're on the bullish or the bearish side of the market is going to depend on what price that you are going to get. And so you will also hear people talk about the spreads. And the spread is basically the bid price minus the ask price. So the spread is the difference between those two prices, and the spread is what your broker is actually going to receive as a fee or a commission. So you want to always look for a broker that has low spreads. That's what that means when you hear people talk about getting a broker that has low spreads. And like I said, the spread is the difference between the broker sell rate and the buy rate. So, and the spreads are going to depend on the time of day that you're trading, the currency pair that you're trading, and the current economic conditions. So you want to take all of that into account when you are executing your trade. You don't want to get in a trade that has a high spread, because that means that you're going to immediately be in drawdown, and you're going to have to get a certain amount of pips in order for you to be in profit. And so you want the lowest spreads possible when it comes to your broker, and you want to never really trade in between I would say 5 p.m. and 7 p.m. Those are typically the times where the spreads are extremely high. And you want to make sure that you're trading major pairs, which I'm going to actually get into that and let you know what the different major and minor pairs are, so that you can minimize those spreads as well. So again, the spread is basically the fee that your broker actually charges you for facilitating those trades on your behalf. And so I also wanted to show you on MetaTrader 4, if you're trading from a computer, on how to identify the bid and the ask price. And that you can find here. You can add this to your chart if you're a person who has a regulated broker, which I've been trading on a regulated broker lately. So if I were on a live chart and I were to click this button here, I could execute a trade directly from TradingView, and this would be the price that I would get it if I was selling, and this would be the price that I would be getting if I was buying. You can also locate that price here in TradingView as well. So, you know, the bid and ask price, they're important, but it's not something that you have to, you know, spend a whole lot of time on. You just want to make sure that the spread is not that big between those two prices in order to, you know, maximize your profits. So now that we've gotten that out the way, let's talk about the majors and the minors. So currencies are classified as either majors or minors, and the majors are the pairs that include the US dollar. So you're going to have the Euro USD, which is the Euro against the US dollar. You're going to have the USD JPY, GBP USD, USD CHF, which is the Switzerland franc, USD CAD, AUD USD, which is the Australian dollar against the US dollar, and NZD USD, the New Zealand dollar against the US dollar. So if you are brand new, these are the pairs that I recommend that you start with. You can start with all of them on your watch list to make a decision on which ones you like the most, or you may decide that you're going to just pick, you know, 2 or 3, which is, you know, also good because you can really get to know those pairs and see how they move. But you want to really stick to the major pairs just because they have the lowest spreads and they have the best movement. So you can catch the most amount of profits and pips when you are trading. So when 2 pairs has 2 majors, it is a major pair. If it has 2 minor pairs, it's known as a exotic pair or a cross. So the majors are the USD, the euro, the Great Britain pound, the Canadian dollar, the Japanese yen, the Switzerland franc, the Australian dollar, and the New Zealand dollar. So you want to stick with those if you are just starting out. Like I said, the minor pairs are those that don't have a major pair in them. So that's going to be like your Mexican peso, your Hong Kong dollar, or your Singapore dollar. So MXN, that's the Mexican peso. HKD, that's your Hong Kong dollar, and SGD, that is the Singapore dollar. So those are pairs that I would really stay away from. Crosses is any pair that does not include USD. These are considered to be crosses. So you can screenshot this if you need to, so that you know what pairs you really want to stay away from. A lot of people that are based in the UK or where these pairs are popular, they typically trade these pairs. But for the most part, because the US dollar is the main currency, a lot of people like to trade pairs that include the US dollar so that they can make the most profit. The exotics are going to be those that I just talked about: Hong Kong, Singapore, South Africa, Thailand, Mexico, Denmark, Sweden, and Norway. You really want to stay away from these pairs. These are the least traded pairs, and these are going to have the highest spreads. The next thing that you want to make sure that you are aware of is pair correlation. So a pair can have positive or negative correlation, which means that if it has positive correlation, that means that those pairs typically move in the same direction. And if they have negative correlation, then they typically move in the opposite direction. This is going to be very important when you are creating your trading plan, when you are deciding on which pairs to actually trade, which are going to be your main pairs. You're going to want to know which pairs are positively and negatively correlated with those pairs, so that if you get into a trade that is going in the opposite direction of what you thought, you can actually get into a counter trade of a different pair and kind of offset those losses. Of course, that is way advanced, and you'll learn about that as you go on. But hedging is something that traders that are advanced, they use that in order to minimize their losses if they get into a trade that is going in the opposite direction of what they anticipated, and they want to stay in the trade because they feel like the market may reverse. And so they want to get some profits in order to minimize that loss and that risk. So here is a chart that actually shows some of the pairs that are correlated. You can screenshot this, or you can also go to forexfactory.com. They have a live correlation chart that's in real time, because this changes based on market conditions. So you may, in your mind say, okay, the US dollar is going to always be correlated with, the Euro USD pair is always going to be correlated with the USD JPY. And that may not always be the case depending on the market conditions. So you always want to look up the real-time correlation chart to see which pairs are correlated with your particular pair that you are trading. So I know I probably threw a lot on y'all today, but by now you should know what the most common currency pairs are. You should know the difference between the majors and the minors, what crosses and exotic pairs are. You should also be comfortable with what the base currency is when you're looking at a currency pair, what the quote currency pairs are. I also talked about what the recommended trading pairs are for newbies, and market execution, which is just basically executing a trade at whatever the current price is. Now, there are such things as buy orders, sell orders. We will get into that, where you can actually decide that I don't want to get into the market at the current price. I'm anticipating price to rise, so I want to put in a buy limit, or I'm expecting price to drop, so I want to put in a sell limit. And that's called futures. When you're trading at a future price, you can put in an order where the market will actually trigger based on a future price that you've anticipated that the market is going to hit. And so for this lesson, I actually want you to go into your MetaTrader 4 app, and I want you to look at the market. Say, for instance, it's Euro USD, and you decide that the market is going to go up. I want you to create a trade. I want you to, of course, this needs to be on demo. Any homework that I give you, I want you to make sure that you do that on a demo account. Never, ever just do it on your live account. And I want you to place 6 market execution trades based. I want you not just to go in and just put it randomly. I want you to actually look at a chart, create a bias, decide which way you think the market is going to go. And I want you to do 6 market execution trades. I want you to establish your take profit and your stop loss and see how those trades play out. It's on demo, so it really doesn't matter whether it is right or wrong. I just want you to get comfortable with executing those trades. I also want you to identify on MetaTrader 4 the bid and the ask price. So when you go to MetaTrader 4, I want you to be able to say, okay, this is the bid price. This is the ask price. So if I'm selling, I'm getting this price. If I'm buying, I'm getting this price. That's very important for you to actually know and understand. And I also want you to decide on what your 4 major pairs are going to be. And I want you to add those to your watch list. And each week, I want you to start really just paying attention to what those pairs are doing and how they are actually moving. And if what you're saying or what your bias is actually correct.